So talking a bit about the investment process, where do the best investment opportunities come from? You described a bit the news flow. Do you think it's about, responding quickly to signals or something unpredictable like COVID or Trump? Or is it about, using the sniper, doing the fundamental research, and when the stars aligned, you sort of take the sniper and make the kill shot?
So there's we kind of started the fund, or the strategy behind the fund was at first kind of the fundamental, the cyclicality, the econometrics. But what we have seen is how much value we can add by doing more short-term trades. Just to start off with the kind of the backbone strategy of the fund, it's the fundamental cyclicality. So you have kind of supply, you see the fleet growth coming from the order book, which it usually takes 2 to 3 years to build a ship. So that's very transparent. And then we spend most of our time on the demand side. And if we kind of figure out those two variables, you get fleet utilization. And if you have fleet utilization, you can deduce basically all other numbers like earnings and asset values and share prices. So that's kind of where we're coming from. And that's, I would say that I haven't seen anyone else employ that approach. And that has been very successful since now 2014 or 2013. Basically predicting all shipping cycles where there have not been a fat tail event like COVID or a dam collapse in Brazil and so on. So that's kind of what we launched the fund on. But what we have seen after now 2 years of managing this fund and also the preceding funds is we can add a lot of value on the more short-term trading. So for instance, if we see a company, for example, we shorted MPCC ahead of their quarterly results now a week or two ago, or in May anyway, because we thought valuation was rich, and we also saw a risk on their dividend distribution. And they announced a cut in their dividend policy during that quarter, and we made a lot of money and we closed the short the next day. So that's a lot of value we add. We are able to predict quarterly results, management policies, and so on. And then it's the information flow, which is also quite asymmetric across shipping. So we have those two strategies I mentioned now is very proactive. We take positions and we predict the outcome of an event. But these other, like Trump, fixtures out of Arabian Gulf, all these kind of things, we are more reactive in those events. So whenever we see those events, we are basically, from a time frame perspective, we are aligned with the rest of the market. But where we are able to add value is that we have a lot of experience and we know exactly what to do. We know which data points are important and which are not. And 99% or 99.99 are non-important. And we know exactly what to do when those important data points come. So we are also able to make money being reactive, but moving ahead of the market with just kind of adding what moves the market is, in my experience, is often a US generalist, which then tends to maybe talk to a shipping analyst or have to go through an investment committee to make the investment decision. So it's a bit time lag there, which we don't have because everything is in-house. We are basically working as a hybrid analyst and fund manager, and all our models are in-house. We don't need to talk to anyone. We just make a decision.
And like you said, maybe shipping is a bit unique in that sense that, okay, it's quite niche. So if you're short Tesla, for instance, because of the fundamentals and that the valuation doesn't make sense with other car companies, that's maybe a bit different. Maybe it's a bit more dangerous to be short those types of companies than, I don't know, a shipping company where you, like you said, if you forecast a dividend policy shift or something like that, you will at least tend to think that the market will react.
Yeah, but it's always, we didn't know that MPCC would cut their dividends this quarter, but in our models are telling us they would have to cut the dividend. The same with Golar, Cool Company and Avilco LNG. But then we kind of hit the quarter because it was obvious, for instance, with Avilco, it had to be that quarter.
Yeah.
If not, the management would not have done their job correctly. But
my point is that just that, Tesla, there's more intangibles in those analysis, software, autonomy, who don't know, something on Mars. Shipping is steel on the water. Maybe it's a bit more, fundamental in that sense, maybe.
Yeah, I wouldn't know too much about Tesla, but I agree with shipping. It's very easy. You have the asset and you have the cash flow. And when the cash flow is not sufficient to pay dividends, you need to cut dividends, or you have to cut debt payments, but that's further down in the stack, so no.
Yeah, but so if I understand you correctly, those short-term trades and shorts in general has been an active part of the fund. Maybe that's not as typical because maybe shipping investors tend to buy an equity hoping it will go up.
Yeah, correct. Shipping is cyclical. It's capital intensive, and I would say the most successful listed companies we have seen over the past 20 years have been those who have distributed capital when they have made money. And when they come into the cyclical trough and are losing money, they ask maybe the same shareholders, we need to be capitalized again because we are on the brink of bankruptcy. But we want to employ that capital buying more vessels because now they're cheap. On the other side, we see companies hoarding cash at the peak of the cycle, not giving cash out to the investors. And because the argument for some of them at least is they want to retain that cash to invest when things are looking good again. But we as investors, we want that cash out now. We want the cash to employ in other segments which have higher expected return. Anyways, it's important to be able to short these equities, I would argue. You can employ a long-only strategy, but then you have to have cash positions during the cyclical contraction. It makes much more sense to be short. So at present we have 9% net short in our fund because we believe the cyclicality of most shipping segments are at peak or have peaked, but we are a long short fund. So we can make money in any market. That's the way I believe you need to be set up in shipping to really make a decent return across cycles.